This kind of a project is super cool. I like it. This type of building and product attracts the design interested type local companies.
Why would you buy this thing with flat leverage when you've got a bunch of local tenants?
I'd like to own it because I like Miami.
It does look like a good tenant roster here. It does seem to kind of fit the vibe of the building from my perspective.
This week's Real Estate Anonymous, Brett, Elliot, and I take a trip to Miami and look at a very cool building on Biscayne Boulevard. Pricing is interesting, but maybe doesn't get there. Hang on to find out and see what happens.
Today's podcast sponsor is RE Cost Seg, the premier provider of cost segregation studies founded by my friend Mitchell Baldridge. Are hefty tax bills eating into your real estate income? RE Cost Seg can help you save significantly on taxes and increase cash flow. Their expert engineers uncover opportunities for accelerated depreciation, delivering accelerated tax savings and valuable insights. With over $225 million in tax savings for clients, they're here to support investors of all levels and sizes. Visit recostseg, recostseg.com/REA pod for a free proposal and start saving today.
All right. Good morning, gents.
Morning.
You want to do a car wash first? What are you going to do today?
I have no preference. I thought we might lead off with your strange deal today.
Okay.
I think the best thing to do, because we got a little bit of feedback on this, is maybe we can each give a quick overview of who the hell we are. I think we've done 6 or 7 of these things, and we've been Elliot, Eric, and Brett. Without divulging too much info, Brett, you want to talk a little bit about why people should listen to you?
Sure. Thanks, Elliot. Brett Moss, based in Orlando, Florida. I would like to fancy myself as a real estate capital markets intermediary, which is just code for broker. And we handle multifamily sales across Florida, as well as build for rent transactions across the country, and work on all sides of the capital stack, from debt placement to equity placement to investment sales. And I've had a lot of fun doing this, being the mystery person and not telling anyone what we've done up to this point.
That's probably detailed enough. Eric, you want to give some people a little flavor?
Yeah, I'm Eric Weatherholtz. I'm a partner in Healy Weatherholtz Properties. We're based in Atlanta. We specialize in retail redevelopment, especially as part of a larger scale mixed use projects. An example would be the renovation and rehabilitation of the former Atlanta Braves home there at Turner Field and the surrounding parking lots. We've got a couple of different business lines, investment management being one, leasing and advisory work, and then we're also investors in food and beverage concepts when we can find good ones.
I will plug your Turner Field redevelopment as a cool project.
Very cool.
I'm Elliot White. I run an affordable housing and workforce housing investment firm based here in Boston. We buy typically larger affordable housing projects, Section 8, low-income housing tax credit, all manner of subordinate debt. And, it's kind of like multifamily investing, but having the folks at the DMV as your business partner. And it's a horrible way to make a living. But for some reason, I keep at it. So rough idea what I'm talking about on the multifamily side, I hope. That's probably enough of an intro. So we've got, Eric, you want to kick this off with you've got kind of a funky redevelopment deals down in Miami. Is that right?
Let's take a trip to Miami.
All right.
Can somebody pull it up on the screen? I'm having technical difficulties in doing that. So this is an iconic office building on Biscayne Boulevard in Miami. It caught my attention. There's a fantastic sign. It's the old an oversized sign with the copper tone logo on it of the dog pulling down the girl's bathing suit from I think it was from the 60s. Anyway, that's plastered, takes up about half the side of the building on sort of a mid-century building in Mimo, as they call it. I like Miami. I spent some time down there. I actually love Miami. There's a There's a lot going on with it. This part of Biscayne Boulevard is very cool. It's kind of got this mid-century vibe to it. Terrific neighborhoods around it. A lot to like about this area. I think the trick is, do you want to own an office building in Miami? Brett, scroll down. Let's take a look at the numbers behind it. If you can zoom in a little bit, read over. I can't see it. Read over what the square footage is.
So the square footage of the building is 21,500 feet, and the lot size is about 29,000 feet. So just what is that? Kind of just over half an acre.
Kind of no parking.
Yeah. And the asking price is $439 per square foot and $325 for on a per square foot basis for the land. You got 4 tenants. The building's 100% occupied, and the stated cap rate is 6.4%.
So the thing about office buildings is you're in the tenant improvement business forever. One guy moves out, the next person, you need to rebuild the space. I think being in Miami, fantastic idea. Being on Biscayne Boulevard in the right area is fantastic idea. This kind of a project is super cool. I like it, if only for the sign. But I can't imagine really making money here because you're going to, the rents are maybe a little under market. That's arguable. But by the time you end up re-tenanting these things, where you're buying an office building full, that's not going to last. You end up putting in the new tenant improvements, leasing commissions to turn it over. I'm not quite sure how you can get ahead of the curve on this kind of thing. And there's not a huge rent appreciation story here. Brett, you know the area. What do you think about it?
I was born in Miami, still not old enough to hear the stories that were going on down there in the early 80s, but I have a good imagination. And there's some good documentaries about it. I agree with what you just said there, Eric. And so to walk that forward a little bit more, if you have one or all of these tenants blow out of the building, you kind of think about alternative uses based on headlines around office product today. And I'd circle back to the comment around parking. This would be a very, very difficult deal to have a restaurant user or any kind of heavily trafficked user there just with the lack of parking, unless it was a very cool and desirable destination type restaurant or alternate user here.
All right, so let's try and chunk this thing out a little bit. Let's maybe start on the revenue side. What do we like? What do we dislike? What do we sort of believe to be true about the revenue here? Eric, you talked a little bit about below market rents. Is there something you like about it? What's your fear? Just that the TI kind of
maybe there's a little bit of room in that rent market, but I think you're going to want to have that anyway. The biggest issue here, well, on the positive side, you're in a terrific neighborhood, but I say neighborhood because it is a neighborhood. It's not really an office district. You happen to have this really cool building in a nice neighborhood, and maybe that doesn't work long-term as an office building. So I don't feel super good about maintaining. I think it's the kind of building that'll stay full. You're not really going to push rents. You're going to have to find a small subset of vibey, cool tenants that would want to be in this building, that would be attracted to it and attracted to the neighborhood. I just don't know how much you can press the rents here over time. And by the time you start to think about re-tenanting the space as things roll over without the ability to have a groundswell underneath you to raise rents, I think it's the kind of thing that sort of flatlines over time. And, bumps in the road like big tax increases, et cetera, could put a lot of pressure on this thing.
Elliot, any thoughts from you there?
I'm looking here. Is this a triple net lease?
The package that we have doesn't really go into a ton of detail on exactly what the lease structure is like here.
Right. So I guess your concern is you've got sort of fixed income with fluctuating expenses. And unless it's triple net, you can pass that off.
Yeah, these kind of leases, typically you're not going to get a
right
pure triple net deal.
It'll be some kind of a modified gross
down here.
Deal.
That's right. Yeah.
All right.
And Miami's is a trippy place to do business. You know, one of the projects that I worked on down there was a little further north here. I won't get too specific about it, but I was working for a company a long time ago that was redeveloping a shopping center up there, and we had brought in a bunch of high-powered contractors and architects, but the problem was these folks were from out of town, and we were working on this project, had plans completed, ready to go, submitted them to the city, and for months couldn't get any kind of reaction. And one day I'm at the construction trailer. Investors are wanting to know what's going on with the thing. Why hasn't anything happened? And one day a guy knocks on the construction trailer. I thought he was looking for a job on the construction crew. And he said, I can help you with your permits. You guys are looking for permits, right? I asked him what he meant. He said, yeah, if you need some help getting the permits, I'm here to help. I said, what does that mean? Anyway, we went back and forth for a while, and he wanted $50,000 to get the permits approved. The out-of-town investors had no interest in dealing with the guy, and nothing ever happened with the permits for about 6 months. Finally, they relented, and things got approved, project got built, and that's how things happen in Miami.
Completely agree with that comment. If you're the out-of-town developer in Miami, you got to keep your head on a swivel.
That's right.
So, Eric, I'm looking at this here, the tenant profile. These are not credit tenants, right? This is not some large organization where there's going to be a lot of backstop to the rent.
That's right. I think you're going to have, this type of building and product attracts the maybe design interested type local companies. And, it's a great product for that kind of thing. But it's a shallower pool, and in general, you're not going to have a lot of credit behind it.
So they've got a cap rate at 6.4. That's the suggested purchase price of $9.4 million against the NOI. Your debt's going to be at 6% these days.
I think higher than that.
And so you're getting. You think it's higher than that?
Office product, I would think it's higher than that.
Okay. So maybe your debt's at 6.5. So maybe ideally you don't want any negative leverage here.
Correct.
But what kind of spread do you want? Why would you buy this thing with flat leverage when you've got a bunch of local tenants? Wouldn't you assume there's some premium you want here? I know you always want a premium, but how do you go thinking about that when you have a non-credit tenant profile?
Well, there's that, and I think maybe more important than the credit is what kind of growth story you've got on the on the rents. I don't think it's that big. I think this is one of those deals where it's sort of, when I saw it, it reminded me of this guy was going goose hunting and came back with all these geese and was saying if I knew what a recipe for cooking all these goose was, and another guy that we know said, yeah, you stuff them with get some good crusty bread, stuff them with that, with butter and wine, cook them down, and when it's all done, you eat the bread and wine out of the middle and chuck the nasty goose away. And that's kind of the feeling that I've got about this building. Is I'd buy it just for the sign that's on the side of the building. I don't know that you want, if you want the rest of the thing, but it's a super cool place to be. What's that worth? Not much. I think this is the type of thing that maybe if you were at, you'd want to be kind of yielding on this thing right now today, probably around 8.
Yeah. Right. That's your return on vibes.
Yeah.
So there's not a ton of upside here in the rent. It doesn't look like there's a lot that you need to do as far as capital. We're looking at this building here.
Let me scroll down to those
Interiors
pictures.
have been fully renovated. Yeah, it's a great looking property. So whoever owns it has loved it. And the outside is sort of
go back to
weird.
that street view. Go back to that street
Sure.
view, Brad.
Yes, the outside's sort of weird and Art Deco and funky in a wonderful way. The inside's been fully renovated. The sign's been restored. They've clearly put some dollars into it. I don't think there's a ton you need to do on the CapEx side aside from checking the major systems. But there doesn't seem to be a lot you can do here to improve your yield. So you've just got to buy it right. And then, the question is, how the hell do you finance this thing? Who's putting debt, even if it's fully leased? Who's putting a debt on this office building?
I think there's some small life companies. There's probably local banks that would do it, but those rates are up close to 7, if not maybe a little bit above that. The but here in the aerial, you can see it. You've got the big 6-lane or whatever Biscayne Boulevard is right there. The great expanse of this part of Miami surrounding it, but this building sticks out. You can see it's kind of probably one of the taller buildings around and kind of off-piste a little bit, as one might say. It's not in the core of an office area. So you've always have a bit of an albatross with something like this, even though it's cool, you're going to be cool and lonely.
No sense in being cool if you're lonely.
That's right.
It's also, Eric, right down the street from the Vagabond Motel, which seems like a place you would get very interested in.
It's no Phoenix Hotel.
I like the idea of the Vagabond Motel. Yeah, no, I think this part of Miami sort of has created this unique mid-century vibe that has taken a lot of care with their architecture and design overview, and it's really got something to it. I don't think of it as an office building or an office location, and it's not walkable. It's kind of off by itself. Terrific neighborhoods around it. I think this would be a great building if you were an owner occupier and wanted to be down the street. It'd be a great building if you owned Coppertone.
Sure.
But barring that, it'd be a great building if you were in the neighborhood. You could take a floor or two, drive in the side gate and rent out the rest of it and have room to expand. That's probably the optimal buyer for this, or somebody that can find a deal on it.
Yeah, and just to circle back to the expenses, and as folks have mentioned, there's not a lot of upside here through rent growth. And so that kind of gets me thinking about expenses. And it wouldn't be a real estate podcast. We didn't talk about insurance at one point, but that would be my biggest concern here. Assuming you hold the lines on rents, the insurance market seems to anecdotally be getting better in the state of Florida, but barring a storm come the fall, that could all change next year. And we've seen, some groups have 20 to 30% year-over-year increases, which would significantly eat into the net operating income here.
Yeah, these kind of deals, you're agreeing to 5-year fixed revenue and 1-year variable expenses. So that's always a risk.
What are the typical rent escalators like on something like this? Is it 3% a year? I mean, I guess it's negotiable, but what are you seeing in these office leases where you've got some lift, some ability to absorb?
Yeah, I think 3% wouldn't be unusual. A lot of times it'll be 5 years fixed, and then sort of a 10% halfway through a 10-year lease. 2 or 3% during the term is also relatively common, and right now people are bargaining and getting to extent better deals. Office is a tale of two cities. I think that some of these larger firms are requiring a back to work position. And so some of the class AA built new buildings are experiencing kind of a tailwind, and things like this that are more periphery. Some boutique buildings are doing well. This one could be that, but I'm not going to make that bet.
It doesn't really look like there's a big redevelopment story here either. I'm looking at the aerials, and it's kind of a single family home, except for along Biscayne Boulevard. You probably got this retail office mixed use zoning, but I don't see anything that's looks like a larger redevelopment that you could point to and say, oh, well, you could buy this and this out parcel, and you end up with, kind of a cool mixed use apartments over retail kind of thing.
Yeah, it's fully built.
Yeah.
You got what you got, and you've got a powder keg potential with expenses, and it doesn't feel like rents will do that for you. I'd like to own it because I like Miami, but I think that pricing would need to be pretty sweet.
Are you a buyer at an 8 cap?
I think I'm a buyer at an 8.5 cap, which wouldn't get it done, but this would be this at an 8.5 is a decent basis. You get some, probably could get maybe a bit below, if you worked it, a bit below 7% on the debt, and there's a little room to push the rents over time, and worse things than owning a cool commercial building in a great neighborhood of Miami.
Yeah, it does seem like the odds that this sort of goes to zero are very low, right? You've got, people who are living there kind of want the funky office space nearby. Your tenants seem to dig the whole vibe. You're priced maybe a bit inside of market, which is nice. You're not worried about this massive rent correction on lease renewal, and you're in a super desirable part of town, right off Biscayne Boulevard. There's worse things to own.
Yeah. And I think, the other gotcha with these kind of buildings is, unlike maybe a 300 unit multifamily building, is if you have 4 tenants you don't go from, 95 to 92% occupancy. You go from 100% to 75 or 100% to 50. And those, when you lose a tenant, you're going to lose them for probably 6 months, maybe even a year, maybe longer. So that can be a drag.
Yeah.
Even if you have people ready to go to take the space, even if you have a lease signed before somebody moves out, you've got, at least 60 days of downtime, and that's very rare. So plan on having a year's worth of downtime when these things turn over, and a small number of tenants like this makes each one of those renewals a hassle.
It does look like a good tenant roster here, where probably be some good people watching, if nothing else, but it does seem to kind of fit the vibe of the building from my perspective.
Agree. Yeah.
This would seem to me that this would be a 1031 type candidate. Not a lot of commercial real estate trading today, but for a group that is sold something, whether it's another office building somewhere else or a apartment building, that are just saying, we don't want to pay taxes, so we're going to buy another real estate asset to avoid deferring paying the gains on the prior sale. It's only $9.5 million or whatever we're going to say the value's worth here, but that seems like a doable execution for some groups in the Miami market.
Yeah, I think if you can get this, put a 50% loan on it at those kind of numbers, it does make some good sense. If you can get it kind of mid 8s or north of that, which isn't out of the question.
Agreed. What's
your vote, Mr. White?
I tend to agree with you. I think I'm a buyer above an 8 if I can get it there. That maybe is it's probably going to trade tighter than that, but I don't know. It's an interesting, funky little place in a part of a market that I think is probably going to continue to grow. I'm not worried about there being some mass correction and people don't want to live down here.
Brett, are you a buyer?
I'm going back to some of the numbers you guys threw out last week on the build for rent deal that was perplexing to everybody, but I think I need to be in low double digits here, which I don't think we've got a seller at what value that would be. So let's just say a 10.
Well, you're kind of piggish today then, aren't you?
And as the broker on the call, I should be the eternal optimist, right? What's gotten into me today?
Brett would rather own some vanilla residential nowhere, Georgia, than own this occupied, cool, small office building off Biscayne Boulevard.
Do I have a deal for you guys?
Do I have a deal for you? Yeah.
All right. You're out of the deal.
Okay.
You're out of the deal, Brett.
No sweat equity or anything?
All right, guys. What else do we need to know about this one? Is that the pod? Is that the wrap?
I think we've covered it. I think 2 out of 3 of us are buyers around an 8 cap, and Brett's being Brett. And
well, when you guys smash a home run on this, please invite me to the closing party when you buy it for 9.5 and sell it for 15.
That's a deal.
All right, guys. Good stuff.
All right,
here.
gents.
Enjoyed it.